Hi everyone, I'm Elvin here, the CEO of Dr. Wealth. I know recently there's a lot of questions about this SIA rights issue as well as the mandatory convertible bonds issue as well. So I think that the deal is very complex, and I will try to decipher what this offer is all about so that you get a better idea how you want to decide what to do with it. And just to have a declaration, I do not have any shares in SIA, and I also have no intention to buy any of the SIA shares going forward in the near future. So with that, at least you can understand that what my stance would be is pretty objective. Okay, it's more of to really understand the offer, and I'm not trying to give any valuation, what is a good price and whether you should buy or sell. Okay, I just wanted to explain this to you. So we will go to the offer document, which can be found on the SGX website. Go under the company announcement, and then we search for Singapore Air. Okay, and we will reach to this page after it's filtered. So you can see there have been a lot of announcements regarding this rights issue, and it just makes sense for us to look at the more recent ones because there can be developments that has trespassed. So we want to make sure that we look at the latest information. And looking at this, this would be the rights details, all right, that we can take a look at. Okay, and there are several kind of announcements over here. Just make sure that we get the full rights document. Yep, this looks like it. There's 14 pages, and you can see that it's quite lengthy and a lot of jargons, and that's why a lot of retail investors will find it hard to understand what this means. Okay, so we'll try to decipher this as much as possible. All right, and as I go along, maybe I will just put out some notes that's easier to refer later. Okay, so I'll just pull out the PowerPoint so that I can uh, put in some of these things that we have captured. So essentially, SIA is trying to raise money. Okay, so there'll be a rights share as well as a rights MCB. Okay, which stands for mandatory convertible bonds, which is mentioned over here. Okay, so there will be this number of rights that are being issued at $3 each. Okay, so I think these are some of the key things that as a shareholder you probably want to take note. Right, so there's a rights issue of $3. Okay, let me just enlarge this so that you can see as well. All right, so there's a rights issue of $3. Based on this, okay, there will be 3 right share for every 2 existing shares that you have. Okay, so if you have 2,000 shares, okay, you'll be awarded 3,000 rights shares, right? And let's move on and pick out some of the numbers that are important. Okay, so this probably just explain to you how they arrive to that price and how do they determine that the theoretical ex-right price would be 440. Okay, this is probably another important point, which means the current share price of 650 as of 25th March, right? This number. Okay, this is the share price that was trading then, but because of this rights issue, they'll be introduced into the share capital, right? The number of shares will expand. Okay, and with more shares, so that cause the share price to come down, right? Because there are more people sharing the same pie as we speak. Okay, and also because the rights price is cheaper than the trading price, right? Trading price is 650, the rights price is $3. Okay, so then after the new introduction of these cheaper shares, the theoretical share price should be around 440. But that doesn't mean that it will trade at 440. Okay, after the rights have been introduced as shares into the stock market. Okay, so this is just something to be aware of. It's just a theoretical value of it. And there's also this rights MCB. Okay, so this is the rights to convert. Okay, it's not you don't get the bonds immediately. This is the rights, just like the rights issue, you get the right shares, but it's not immediately a shares. So you need to pay money in order for you to convert. So for the rights MCB is $1. Okay, $1. That's the rights price that you need to pay. Okay, in order for you to own the bonds. All right. And it's fully convertible, blah 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 blah. Not important, not important. Okay, so they're just trying to tell you what it means. Okay, and eventually, what they are trying to say is that because mandatory convertible bonds means you must convert the bonds to SIA shares at maturity. And how would they determine how much shares will you receive after the bonds mature? Will be based on this conversion price. Okay, all right, it will be based on this conversion price of 484 per share. Okay, so that is what you're going to expect when it matures. Okay, so that's how you're going to convert to shares. Right, let's just take a look some more. Okay, there's also some important points like Temasek has given an irrevocable undertaking, and what that means is that they promise to buy to vote in favor of to approve all these rights issue, all these MCB issues, okay, as well as they will subscribe. Okay, they will subscribe and procure any unsubscribed rights. Okay, so which means if nobody wants to buy, Temasek will sweep everything up. Okay, so they have given that kind of promise to all the shareholders and the company. Okay, so these are just some repeated notes. As you can see, these are the terms that are being mentioned previously. This is just in a table form. That's easier for you to refer to. Okay, but they mean the same thing. All right, let's just take a look some more. Okay, and there's also something that you need to take note of, that is redemption. Okay, that means this bonds is callable. All right, this bond is callable by SIA on a semi-annual basis. So every 6 months, SIA can decide whether to redeem the bond from you. Okay, so that is something you need to take note of. So it's callable every 6 months. Okay, for the rights MCB. Okay, and let's just scroll down some more. All right, and how would they what does that mean, right? Is that the bonds you can own after you exercise it at $1 per rights MCB. Okay, so let's say you have put in 1,000. Eventually what you expect, right, is that you'll get back an equivalent of 1,806. Okay, so that is your maturity maturity amount. Okay, maturity amount returned to you. Actually, it's not returned to you because this is a zero coupon bond. Okay, this is a zero coupon bond. So essentially, based on 1,000 principal. Okay, so this should be something like this. All right, so that's, you can use this to calculate your U. All right, so what this means, right, this bonds is also it doesn't have any interest that's given to you, so it's a zero coupon bond. Okay, that means they don't pay you any interest. All right, and how do they then repay you is that they give you a higher amount that's returned to you based on the principal that you have put in. Okay, but because by right, bonds you put in 1,000, you get back 1,000 at maturity, right? But because this is a zero coupon bond, they don't pay interest along the way. They pay you at a larger amount at the end. Okay, but they are not going to pay you in cash. Okay, they're not going to pay you in cash. They're going to pay you in shares. Remember, this is a convertible bond, all right, and it's mandatory, so you cannot choose to receive in cash. Only the callable, if let's say SIA decided to call it back before maturity, then yes, they will be able to give you in terms of the cash. All right. So then let's just take a look some more, okay, and see any other important ones. Some of these are very administrative, okay. So what I do usually is that I scan through and really pick up the more important parts, right? And of course they have to explain why are they doing this and how are they going to spend money. Okay, but we are not here to judge whatever they do for the business is right or wrong. We really just want to make sense of this deal. Okay, and let's just take a look some more. All right, so there's also something that you need to take a note. I think they would have mentioned that this is renounceable. Yes, okay. So you can see there's another keyword here that's renounceable. Renounceable means that these rights, they will be given to all the shareholders according to these terms, okay. But at the same time, if let's say you choose not to subscribe to these rights, right, you can actually sell it. You can actually sell it in the stock market because all these rights will be listed. All right, all these rights will be listed, and maybe I just show you. I think they already have the symbol that is on SGX website. Okay, we got the data out. All right, so let's take a look at the symbols. Okay, you can see here SIA MCB rights, R stand for rights, and SIA rights. Right, so which means the counter are already ready, and once you get the rights, you can decide to sell them. If you don't want to sell them, then you will have to keep them until they mature, then you exercise. Okay, because these rights will only trade at a period. They have a trading period like probably about 2 weeks or so, and then they will stop trading, and that's where you will decide whether you want to exercise the rights. So this is known as renounceable. Right, so this kind of rights are known as renounceable. This rights for NCB is also renounceable, and they are trading at SIA R. That is the name. Okay, and then the symbol, right? The symbol would be LRDR. Okay, as for the MCB, the name of the rights will be SIA MCB R, and then the symbol will be LRDR. Sorry, that is for the other one, GANR. So these two rights will start trading, and then of course we need to find out the timing when this is trading, etc. So we will move on to the important dates. Okay, so we can see that it was, I think the dates was mentioned after it was approved at the EGM. Okay, so we are sure that this is going to happen, and the dates are in fact out already. Okay, here we are, and all approved, right? So there isn't any objections that could overturn this. So there are some important dates that we need to take note of. And so these are dates. They say that the last date for shares to trade come rights to the rights issue is Tuesday. X right will be on 6 May. Right? So what this means is that it refers to the mother share, which is the SIA shares. They will trade X right as of 6 May 9 a.m., which means if you buy shares even on 5th May, you will still receive the rights. Okay, but if you buy the rights, if you buy the SIA shares on 6th May and beyond, you will not be entitled the rights. Okay, so this is referring to the mother share and who gets the rights, okay, based on this cut-off date. And let's take a look at other things. So there'll be more information that's being sent to you. And then this is an important date, commencement of trading of rights, which will be on 13 May 2020, 9 a.m. Right? So this is the important time. So this is where your rights will start trading, which means if you have the rights, you can start selling it from this date and this time onwards. Okay, 13 May, the rights will start trading and you can sell it. So those who want to buy more and want to participate in this rights issue more, you can actually buy more shares buy more rights as well, and eventually convert them to shares later at $3 per piece. Okay, so the rights is free to shareholders, all right, but you want to convert to shares, you need to pay money. Okay, same likewise for the MCB rights. The rights are free to shareholders based on the allocation, but then you want to convert to the bonds, right? You need to pay $1 to exercise it, okay, to exercise the rights, right? So those are the figures, and let's take a look at when is the deadline. Okay, last date for acceptance of and payment of rights. Okay, this is the payment of rights, and this is last date and time for splitting and trading of rights. Okay, so this is the last day of trading, right? So this is the start trading date, and then this would be the last trading date. Okay, so you will have these two dates. That's there. Okay, so we will take a look at the other dates. Okay, so which means you must pay money by this date as well. Okay, you must pay money at this date, exercise the rights, okay, by these dates. Right, 28 May will be the exercise date. Okay, and this final dates is just referring to when would the rights be allocated, and then they will be available for trading. Okay, so those are not so important, but we have gotten the important timing and the dates, and this will apply to both the rights as well as the rights to the MCB. Okay, so it will be the same in terms of the timeline. All right, so we have some good information over here. And let's take a look at the next thing and see whether we can get more information from the slides. Because the slides will give you a bit more information about, or it can be clearer as well because there are a lot more graphics, right, to mention. So the initial part are more of like the bigger macro environment of the aviation industry, and also some of the stats. So those are not what we want to evaluate. Let's go straight to the deal. Okay, so this is a summary of the proposed offer. Okay, so you can see what we have picked out from the announcement just now has been repeated in this slide as well. And oh, I forgot this part where the conversion rate, right? How many rights are you going to get for the MCB based on the number of shares that you're holding? Right, so let's just probably put it over here. All right, so that's the one that was missing. And let's carry on to look at all this data. Right, so you can also see that the U to callable part, the U will actually change, which means there's a table here. This is better, right? So it's a 10-year bond, right? And remember, every 6 months they can recall the bond if they want to. And so if they decided to recall early, right, your yield is about 4%. Okay, your annual yield is about 4%. Okay, so this is a zero coupon bond that is yielding at 4 to 6%. Okay, right. So these are the numbers. If let's say from the 5th year onwards, the yield will increase, and then from the 8th year onwards, the yield will increase further to 6. So it depends when they want to call. If they don't call, then you will mature at the 10 years mark, and you will automatically be converted to shares based on the conversion price of $4.84. And if that happens, your actual yield will actually be 6%. Okay, based on the MCB, right? So these are some of the things, and there are some examples of calculation so that you can get an idea what this means, right? So I think that's pretty much the details. All right. So maybe I'll just summarize what we have picked up so far. So I spelled it wrongly. Yeah. Okay. Renounceable. All right. So there are two things that they are going to issue. One is the renounceable rights, okay, and then one is the renounceable MCB rights, right? So there are two different things, okay. There are two different things. Issue price of $1. Okay, let me just put it over here so that this is clearer. Right. So you are going to get two things. If you're an SIA shareholder, you're going to get this SIA R and you're going to get this SIA MCB R. And how do you know how many you're going to get? So for the SIA R, you're going to get 3 rights for every 2 shares that you have. Okay. And for the MCB R, you're going to get 295 rights for every 100 shares. Okay. So you will have this. You can always check with your broker or your CDB account to verify the actual number so that you know what to don't sell the wrong number if you want to, or if you want to buy, make sure that you also calculate properly how much more you need. And the rights will start trading at this name and symbol, okay, at 13 May 9 a.m. okay, and the last trading day will be on 21st May. So it's a good about 7 days, okay, a week, but probably 5 trading days, right? Because there's a weekend that's over there. So it'll be the same for both of the SIA rights as well as the SIA MCB rights. And the exercise day deadline would be another week later, that is 28 May, okay? And likewise for the MCB, that is where you need to pay money, okay? You need, for every rights that you want to convert to the shares, you need to pay $3, and every rights MCB that you want to convert to bonds, you need to pay $1, right, to exercise that right, and it has to be done by 28 May, 5 p.m. And some of these things are the theoretical price 440. Yeah, these are not so important. Okay, so by right, what this means is that you should expect SIA to trade around this region after the rights has been introduced. And let's look at the MCB because the bonds will have more things, right? So the bonds is a zero coupon bond. Okay, that means it doesn't pay any interest, right? Because by right bonds you should be receiving interest regularly, but you don't. So it's as good as if they don't redeem it, because they can redeem it every 6 months. They have a chance. If they don't redeem it, you will have 10 years without any interest paid to you, and you will only receive for every 1,000 you have invested in the bonds, you will only receive $1,806 equivalent back to you. But you will not get in cash. You will get in terms of share by converting this bond to shares at a rate of $4.84. Okay, so you just take this 1,800 divided by 486, you'll get the number of shares that you will receive. So if that is the case, in terms of the amount of shares, the value of the shares that you're going to receive, okay, your yield to maturity will be 6% at the 10th year. If let's say SIA decided to call before the 5-year mark, you will be entitled about 4% yield. Right, so these are the details. I hope it has been made clearer to you. Nonetheless, most importantly, you have to decide for yourself with this information, what are you going to do, and take note of all these deadlines. Okay, don't just blindly buy and hold, and then because it's too difficult, you don't have to think about it. We try to make it as simple as possible for you, and I hope that it has been useful. All right, thanks for watching.